Good morning, everybody. This week I thought we would discuss the new tax changes which are coming into force on Friday of this week, which are going to impact on pretty much all of our landlords unless you are a limited company or you don't have a mortgage. So probably about 75% of our landlords, I would say, are going to be impacted by these new tax legislative changes. And I'm going to run through what impact they're going to have on you and how you should be calculating them. I am not a tax specialist, first and foremost, so I am merely giving you some worked examples as to the changes in this legislation. You should obviously be getting professional advice, and I am not a tax specialist. Anyway, right, so the piece of legislation is called Section 24, and basically it is disallowing mortgage interest from being deducted from your rental income. So the profit you make is going to look higher than the profit you currently make when you offset your mortgage interest. This is a tiered change. The first part of it is coming in this year, so that's 2017-2018. And instead of being able to deduct 100% of your mortgage interest from your rental income, this year you're going to be able to only deduct 75%, then it's down to 50% the next year, down to 25%, and then zero. However, you are going to be able to deduct 20% of your financing costs from 2021. So I think what I'll do is I'll work through an example, and I think that makes the most sense. So I'm just going to flick the screen round. Okay, so just to go through our worked example, so if the current position is such that your rent is, let's call it 650, so your rent per annum is going to be 7,800. And then we take off your expenses, so repairs, let's call it 700. Factoring, let's call it £40 a month, so 480. Agent fees 1,000, and let's say your mortgage interest is about 4,500. So your profit at the moment, working on these examples, is 1,120. That is the profit you're making and that you're declaring. So as a basic rate taxpayer, you're paying 20% on that. So 20% of your 1120 is 224. And if you're a higher rate taxpayer, it's double that, so 448. So that is the current position, okay? So come 2020, 2021, you're going to have the change being that your mortgage interest is not deductible at all. So your rent still 7,800, your repairs 700, factoring 480, agent fees 1,000, mortgage interest you cannot deduct anything, so nil. Okay, so your profit on that is going to be 5,620. So your profit's 5,620. As a basic rate taxpayer, you're going to be paying 20% of that, so 1,124. As a higher rate taxpayer, double that, so 2,248. However, we do get 20% relief on a reducer on the financing costs. So remember, our financing costs were 4,500, our mortgage interest. So we get to deduct 20% of that. So 20% of 4,500 is 900. So the final figure, as of the changes, is your basic rate is going to pay 1,124 minus 900 reducer. So the basic rate is going to be paying, basic rate taxpayer is going to be paying 224, which is what they were paying under the current system before we were not allowed to deduct mortgage interest. However, the higher rate taxpayer is now paying 2,248 less than 900. So your higher rate taxpayer is now paying 1,348. So your higher rate taxpayer, tax has gone up. Basic rate taxpayer, it's just stayed the same. Okay.
So there's quite a few suggestions from people as to how you can be mitigating the changes to your tax if you are one of the people who has been impacted. I am not a tax specialist, as I have now said 3 times. However, some suggestions are things like setting up a limited company, perhaps transferring ownership to a spouse who's on a lower tax banding. You should definitely get professional advice, and if you would like any suggestions in terms of getting tax advice, please do give me a shout. I hope you found that example helpful, and if you have any questions, just let me know. Thanks, bye.